Welcome back to Investing Talk podcast. Today we're taking a closer look at Uber Technologies. You've provided a really interesting set of reports and news, and our goal here is to sort of pull out the most important insights, give you a solid grasp of where Uber stands right now. We'll cover their financials, their market strategies, what the future might hold, trying to cut through some of the noise.
Sounds good. A
Yeah.
lot to unpack there with Uber. Where should we start? Maybe the financial picture.
Okay, let's start with the money. So in 2024, Uber's revenue hit about $43.98 billion.
44 billion almost.
Right. And that's a solid 19% jump from the year before.
19% year over year is pretty strong.
And if you zoom out a bit,
Wow.
from 2019 to 2024, their revenue's grown by roughly 25% each year, annually.
Wow, 25% annually over 5 years. That kind of consistency, especially through, well, everything that happened in those years, it suggests a real resilience.
It does. Shows they can capture markets or find new ways to grow.
Definitely a positive signal for their business model, that adaptability.
Now, earnings per share, it's been a bit up and down, like you often see with tech firms still in heavy growth mode.
Sure, reinvestment often impacts that bottom line number initially.
But 2024 saw a big jump. Seems it was partly due to a tax valuation release and some smart equity investments they made.
Interesting. So specific events boosted it, but maybe also hints at improving underlying profitability.
Could be. We don't have a specific PE ratio here, but worth remembering tech often trades at higher multiples anyway because of that growth expectation.
True, the market often prices in future potential for these kinds of companies, and those equity investments show they're looking beyond just rides and delivery, too.
And here's something that really stood out to me. Free cash flow.
Ah, yes. What did the numbers show there?
It hit $6.9 billion in 2024.
$6.9 billion.
Yeah, more than double the $3.36 billion they had in 2023.
That's a huge leap. More than double. That means they're generating serious cash now.
Exactly. Gives them a lot of flexibility.
Flexibility to do what, though? Reinvest. Acquisitions.
Well, they're not paying dividends. Seems they're focusing on growth and buying back shares instead.
Okay, so prioritizing share buybacks over dividends right now. That tells you something about how management sees their stock value versus immediate shareholder returns.
Let's shift a bit. Business landscape.
Yeah.
What makes Uber stand out in such a crowded space?
Well, the brand name, for one. It's globally recognized.
Huge advantage. And their size. It gives them cost advantages, economies of scale.
Definitely. Plus, they're big bets on the future, particularly autonomous vehicles. That could fundamentally change their costs.
A massive potential shift if or when that technology matures?
Right now, though, they're dominant in ride-hailing and food delivery. They benefit massively from network effects.
Explain that a little.
Well, the more people using the platform, riders, drivers, restaurants, customers, the more valuable it becomes for everyone involved. It feeds itself.
Right, creates a kind of moat. Harder for new players to break in when everyone's already on Uber.
Precisely. It's a strong competitive advantage.
Looking ahead, where's the growth coming from? Seems like new areas. Healthcare, transport, enterprise solutions.
And pushing that Uber One subscription, building loyalty.
But they still face those headwinds, don't they? Regulations popping up everywhere.
Always a factor in this industry. And competition is fierce, especially from strong local players in different regions.
And the big unknown, autonomous vehicles, how that actually plays out is still anyone's guess, really.
It's a complex balancing act. Expand into new verticals while managing core business pressures and navigating that massive tech transition.
Who's steering the ship through all this?
Darkos Rashagi. He's been CEO since 2017, overseeing a lot of this growth and the push towards profitability.
Okay, so continuity there.
And the CFO, Prashant Mahendra Raja, joined in 2022. Key figure in the financial strategy, obviously.
Right. We don't have specifics on insider trading here, but that's always something investors should check through SEC filings.
Always standard due diligence. Stable leadership, though, can be a positive in such a dynamic market.
What about valuation metrics? We mentioned PE is tricky. What about others?
Well, we don't have a specific price-to-book ratio in this info. That compares market price to the company's assets on paper.
Which, for a tech company like Uber with fewer physical assets, might not be the most telling metric anyway.
Perhaps not the primary one. Growth potential often matters more. Similarly, no specific beta figure here, which measures volatility against a market.
But it's safe to assume, being a tech stock, especially one involved in AVs, it's likely more volatile than the broader market.
Generally, yes. Higher potential swings, both up and down. Higher risk, potentially higher reward.
Okay, let's talk risks more directly. Regulatory probes.
That's a key one. The FTC is apparently looking into their subscription practices, Uber One, and also driver payments.
That could lead to fines or forced changes in how they operate?
It's a persistent risk factor.
Yeah.
And then the autonomous vehicle transition itself. It's incredibly expensive, complex.
And success isn't guaranteed. Huge R&D costs, technical hurdles, public acceptance.
Exactly. Significant technological and execution risk there. It's a balancing act for investors weighing these known risks against the potential upside.
So let's fast forward to more recent stuff. April 2025. What's been happening?
Their latest earnings, Q4 and full year 2024, looked pretty strong based on the reports.
Yeah, gross bookings up 21%.
And adjusted EBITDA, that measure of operating profitability, jumped 44% to $1.8 billion.
Those are hefty numbers. Suggests they're getting more efficient.
It seems so. Strong demand plus better operational leverage, perhaps.
They're also doing interesting partnerships. Coco Robotics for emission-free delivery in Miami.
Taps into that sustainability angle. And WeRide for autonomous vehicles in Dubai, expanding the AV footprint.
Shows they're pushing innovation on multiple fronts, not just AVs, but also greener options.
These collaborations can be smart ways to bring in expertise or test new technologies without bearing all the costs and risk internally.
The self-driving piece is really heating up, isn't it? Waymo, that's Google's Alphabet's company.
Right, Waymo.
They're launching robotaxis in Austin using Uber's platform.
Now, that's interesting, using Uber's network to deploy their autonomous vehicles.
Could that be a major turning point in 2025? A model for how AVs actually get rolled out?
It certainly could be. It leverages Uber's existing user base and demand, while Waymo provides the tech, potentially speeds up adoption significantly.
How's the market taking all this?
Generally positive, it seems. The stock is up over 12% so far in 2025.
Recovering from a dip over the past year, then?
Looks like it. Analyst consensus is around a moderate buy. Price targets averaging near $90.
Though you mentioned some recent downward adjustments by a few analysts.
A few, yes. So still some caution or differing views on the exact valuation out there, not universal agreement.
Let's look closer at that stock movement. That 7.22% jump on February 6th seems clearly tied to those strong earnings results.
Makes sense. Markets often react strongly to earnings beats and positive guidance.
But then over the last month, it's been more modest, up about 1%, maybe consolidating gains.
Could be. Or just reflecting broader market movements. 6 months, though, it's up a solid 10%.
A decent medium-term trend, but the year-over-year is still slightly down, about 4%.
Right, so it depends on your time horizon. Short-term volatility, medium-term strength, but still recovering from whatever dragged it down over the last 12 months. Investors are likely weighing current performance against future potential and lingering concerns.
Drilling down on those financials again, Q4 2024, $770 million in operating income.
And that $1.8 billion in adjusted EBITDA we mentioned shows real operating profit, not just revenue growth.
And net income for the full year 2024, a whopping $9.856 billion.
That's a significant net income figure, driven partly by those one-off items like the tax valuation perhaps, but still substantial.
Their debt-to-equity ratio is around 42.3%. How does that sound?
42.3%. That suggests a manageable level of debt relative to their equity base, not overly leveraged, which is good for financial stability.
So improved profitability, manageable debt, adds to the picture of increasing financial health.
It certainly strengthens the case for their long-term financial stability, yes. Gives them more resilient.
Okay, let's revisit the flags and bright spots with this latest info. Regulatory risks. Still a major watch item.
Absolutely. That hasn't gone away. The FTC probes, potential local regulations. It's an ongoing uncertainty.
And competition isn't letting up. Lyft, DoorDash, they're still big forces.
Very much so. Intense competition in both core markets.
But on the flip side, that commitment to AVs and using AI, that's a clear strength, driving optimism.
It seems to be a major part of the bullish case for Uber, the potential for disruption through technology.
And their diversification moves, like grocery delivery with Wegmans, that helps too, right? Spreading the risk.
Diversification into adjacent markets like grocery, healthcare, enterprise. It broadens their revenue base and potentially deepens customer relationships, makes them less reliant on just rides.
What about sentiment, investor and public feeling?
While the rising price targets from some analysts suggest growing investor confidence.
And online chatter, social media.
Reports suggest buzz around their innovation, market dominance. Also, growing public interest in the sustainable transport angle they're exploring. That could be a soft asset, improving brand image.
Positive sentiment can definitely help, attracting talent, partners, maybe even smoothing regulatory paths sometimes.
Potentially. It contributes to the overall narrative around the company.
How does Uber stack up competitively, summing it up? Global reach is a big plus.
Huge. And the diverse services, rides, eats, freight, groceries now. It's a broad platform.
While Lyft is focused mainly on U.S. rides.
And DoorDash dominates U.S. food delivery. Grab is strong in Southeast Asia.
Uber's scale, and especially that push into autonomous driving, that seems to be the key long-term differentiator.
That's arguably their biggest potential game changer compared to many competitors, the investment in fundamentally altering the transportation landscape.
So looking ahead, what are the key things to watch?
Definitely keep an eye on autonomous vehicle developments. Any major breakthroughs, partnerships like Waymo scaling up or regulatory green lights, those could be huge catalysts.
And earnings, naturally. Need to see continued strong performance to justify the optimism.
For sure, but balanced against that are the potential headwinds. Regulatory changes anywhere globally could impact them, and competition isn't getting any easier.
So it really hinges on executing that AV strategy while keeping the core business humming and navigating those external pressures.
That seems to be the core challenge and opportunity for them right now.
Okay, let's try to pull this all together. Taking a step back, what does this mean for you, our informed listener?
Well, Uber is clearly a complex story. You've got strong growth, ambitious innovation, but also persistent challenges.
They're a leader, no doubt, but in a landscape that's changing incredibly fast.
Their recent financials look encouraging. The moves into future tech like AVs are exciting.
But those regulatory hurdles and the intense competition, they're very real. It's definitely not a simple buy or sell.
Not at all. It's a company that demands ongoing attention, critical thinking.
So what stands out most to you from all this? What questions does this raise for your own research, your own understanding?
We definitely encourage you to dig deeper. Look at their SEC filings, track news on those AV partnerships, and regulatory developments.
Thanks for joining us for this discussion on Uber. Remember to subscribe, like, and comment too. Let us know what other companies or topics you'd like us to explore next time.